In a relatively short period, China will be on the verge of the following significant downturn. Why is this important? A complete financial collapse in China would undoubtedly impact the rest of the globe because it has one of the most significant economies in the world, is competing with the dollar to become the world's reserve currency, and produces 20% of the goods we consume daily. Hello guys, welcome back to the channel and greetings. Today's video will two biggest China economic sectors crushed, so stay focused. Real estate is the first two terms in a lot of this. As people chose to invest in real estate as a safety net over other forms of investment during the past few years, China has seen what many would term a real estate bubble, leading to double-digit annual real estate market growth. In addition, the urbanization of most rural China and the social pressure to own a home led to a large-scale migration to cities that provided more opportunities and potential for higher salaries, further increasing demand. The nation was creating 5 times as many homes as America and Europe. However, there were still so few available that some communities would employ a lottery system to determine who gets to buy a home, with some areas having odds as low as 1 in 60. Consequently, more than twice as much of the nation's wealth, 70%, are now dependent on the real estate market than it is in the US. However, there was a second issue. People would buy anything they could because they thought the property market was a terrific investment. Because at that time, property values were rising so quickly that developers would pre-sell apartments. Even if they didn't live there and kept the property unoccupied, they could always sell it in the future for a profit, where the buyer would start making payments on a home that hadn't even been built yet, in the hope that it would be less expensive to buy now than it would be later because property values keep going up. Property purchasers would spend up to 23 times their annual income on a home, with the mortgage sometimes eating up more than half of their gross income. They would finance and borrow money from family and friends to be able to boast that they could own a home regardless of how much it would cost. The government stepped in to buy the excess inventory to keep the market stable, which caused a 22% vacancy rate throughout China as homebuyers bought second properties for investment well outside the city borders without limitations. Additionally, the growing demand for housing meant less monitoring of the quality of construction, which naturally resulted in serious building issues as developers cut corners to minimize costs and maximize profits. Instead, the issue was that these pre-sale units were incomplete. It's claimed that some of the biggest real estate developers took pre-sale money and used it as a down payment for new projects to attract more pre-sale deposits and run a real estate Ponzi scheme using the money from the latest projects to finish the construction of older ones gradually. Even more startling is that pre-sales and deposits made up more than twice as much finance for developers in 2019 and 20 compared to bank loans, and pre-sales capital is fully interest-free. Bank loans and bonds typically have an annual interest rate of at least 5%. Today's reality is a metropolis of abandoned housing projects and broken hopes, owned by 8 struggling real estate developers who lack the funds to continue. At the same time, work has entirely ceased in the middle of a project. But this merely represents the very beginning. A growing number of projects have halted work or gone behind schedule due to a lack of finance. All homeowners with existing mortgage loans will cease making payments unless development picks up by October 20th, according to a mortgage boycott organized by purchasers. Although more than 320 projects in roughly 100 cities were facing similar protests, which shook markets and forced authorities to seize banks and developers to quell the unrest, this whole thing began with the real estate tycoon Evergrande, which went from being $300 billion in debt to insolvent in 4 weeks. Home sales and real estate investments have fallen significantly since February 2021, even though it may be too late to undo the damage. At the same time, the credit market grew at an incredible rate, and developers continued to borrow money to stay afloat. What is China doing about it, and why does the problem only appear to grow worse from here? The United States Federal Reserve even went on record to warn that the fragility in China's real estate industry could transfer to the US if it deteriorated severely. China claims to have tightened regulations by monitoring customer funds and guaranteeing prompt delivery of new units. Still, since 96% of the country's population is exposed to the real estate market, and 13 million units have already been halted in the past year alone, the effects will unavoidably spread to other industries, including the banking sector. The authorities claim that the issues was caused by a takeover of the bank by criminal gangs, which they said dated back to 2011 and was met with a lot of skepticism across Chinese social media, where the incident was closely followed. On July 11th, protests erupted outside the People's Bank of China, where customer deposits have been frozen since April. However, the China Bank and Insurance Commission claims that the banks above enticed customers with claims of high interest rates before unlawfully transferring those monies to independently controlled criminal enterprises afterward. Nevertheless, this wasn't a single occurrence. According to reports, 4,000 smaller lenders hold a quarter of the industry's total assets. These lenders frequently have opaque ownership and governance structures and are more susceptible to corruption and sharp economic slowdown. Over 400,000 customers across China have been the victims of similar bank-run activities. Even while bank accounts are insured up to around $75,000 US, if the bank engages in non-compliant operations, clients could lose everything. For China, the most significant risk is their population losing faith in the country's whole banking system. An inside source claims that some developers have been taking the money required to finish housing projects outside the country. For instance, they may take out a loan for $80 million, spend $10 million buying a new property to collect more pre-sale deposits, and then transfer the money overseas, leaving the bank and the people on the hook for the amount that is unpaid. The Chinese government has agreed to reimburse its customers approximately $15,000, but it's possible that this won't be enough to regain their complete trust in the banking system, raising concerns that there could be a bank run. Cassandra Academy noted that fractional reserve banking is a practice used by both the US and China. Under this arrangement, a bank is only obligated to hold 10% of its clientele's assets at all times. The remaining 90% may be freely given out or lent to other institutions for profit. Consumer confidence in the Chinese economy has declined as a result of this happening at the same time that their population has lost faith in the real estate market. And the government's priority is to stop the negative feedback loop caused by the developers' tight liquidity and high leverage ratio. After all, if people don't trust banks, then they won't borrow as much money. If they don't buy real estate, developers won't take on projects, which repeats the cycle to a greater extent, while individuals withdraw cash from the system and guard what's left. However, China has excelled at postponing events by compensating certain accounts for overseas transactions and saving bankrupt developers by providing different loans. Seriously, this is too unbelievable to be true. Over-leveraged properties can be resolved by simply taking out extra loans to make up for them. Similar to encouraging a lottery addict to buy more tickets to make up for their losses in a way. However, it's anticipated that this new fund could raise 300 billion yuan, which may be just enough to regain market confidence while waiting for the economy to revive. According to a source familiar with the situation, this fund would finance the purchase of incomplete housing projects, support their completion, and rent the finished products to people. Although it hasn't been the case in China, this hasn't been a cause for concern. They've made it very apparent that they want to safeguard the market at all costs. But in the absence of strong regulation, it seems too many dishonest people are trying to take advantage of the current setup, and that might serve to postpone the inevitable. It's too early to tell how this will turn out, but it's been noted that China will miss its 5.5% annual economic growth target. We're starting to realize very quickly that the days of China's meteoric economic rise are over. That's all we have for you today. If you don't want to miss any future videos, subscribe to the channel and switch on notifications.